to today's video. Today we're going to be talking about pre-market analysis, otherwise known as PMA. Pre-market analysis is definitely something that has had a very positive impact on my trading game ever since I've implemented into it. So this is going to be an important video, and if you guys practice this enough, it'll definitely have the same effect on your trading game. So we're going to start off with what is pre-market analysis. PMA is, in simple terms, analyzing the market before you trade and checking what market conditions are obvious, as well as is there any support and resistance lines that you guys could be marking down in order to help you guys for future trades. Pre-market analysis is something that shouldn't be the most exciting part about your trading. If you do this often enough, it'll get boring, to be quite honest. Pre-market analysis is not very fun to me, but it's something that is very, very important in doing. Pre-market analysis is going to set you up for very successful trades if taken seriously. Later on in the video, I'm going to show you guys a couple other websites outside of TradeView that you guys should implement into your pre-market analysis, as well as just your day-to-day trading. These other websites are Currency Strength Meter as well as Forex Factory, but we'll get into those a little later on. So we're going to start off with the beginning practices of pre-market analysis. So first thing I do when I hop on my computer for the day and prepare myself for trading is look at any obvious trends in the market, okay? So what market condition is it in? Are we in a consolidation market? Are we in a retracement market? Are we in a very trendy market? If we are in a very trendy market, how long do the trends last, right? Are the consolidation periods very long? Are they very short? And so these are all things you guys want to be taking into account when you're doing your market condition pre-market analysis. So to start off in our market analysis, we can see we're in a little bit of a consolidation period here, just getting off of the trend, otherwise known as a retracement period. This is quite a big trend, so we're going to want to keep that in mind. We're having some fairly long trends going on here. So once again, if we get into a possible trendy market in the future while trading, it may last for a while. As we see, we have a nice consolidation period here, as you can see, that lasted quite a while too. So we have a fairly calm market at the moment, meaning any state that the market is in, it'll last for a while and it's not going to jump around too much, which is something important that you guys should take in. So testing your market conditions should be fairly quick. It's just honestly taking a glance at the past little bit of the market and see how it's moved. If there's any obvious movements that you guys can kind of pattern forward to keep those in mind, as well as how long the stages of the market have been lasting. Are the trends very big? Are they kind of subtle? And so forth. Next, we're going to move on to marking down our support and resistance lines. So if we zoom in here, what I want you guys to see is at the left side, I'm going to click this little arrow and I will click horizontal ray, okay? Horizontal ray allows you to, if you notice any trend lines like I see right here, there's a little bit of a resistance line. I'm going to go to the first kind of candle that it has formed and just click. So what this will do is it'll just form a line going forward for you, and you can kind of set it and forget it kind of thing. When you see a support and or resistance line, what you're going to want to do is instead of just putting one line where you guys think the line is, I'm going to actually put a little area. So you're going to undershoot the support line, support and or resistance, sorry, and overshoot. And this will create a little area forming two lines. And so for the future, once a candle, rather than just having the one line where you think the candle will bounce off, you have kind of an area. So if the candle were to ever enter the area, you can kind of have a little bit of playing room. And if it were to exit, that's when you would place your sell or buy. So for example, right here, if we zoom in on this candle here, the green candle entered the resistance line originally, right? So what I would do is I would wait for the next candle, and once the next candle exited the resistance area that we've created, that's when I would place my sell. And as you can see, it would have been a successful sell. Same thing here. This candle entered the resistance area that we have created. Next candle, it exited. That once again, that would have been a successful sell. So this is just a little trick I've picked up on my own that I think if you guys implemented it, it could definitely help you out. Same thing right here, last example, entered the resistance area, next candle exited, would have been a successful sell. So one quick thing I want to add in, when you guys are placing your two lines, you kind of want to have a happy medium of how far away your lines are spaced. So you don't want them too far apart, because if so, your trades might not be as accurate when you enter them, right? But at the same time, you don't want to have them too close, because then you might not catch all of your trades, right? You'd miss that one, you'd maybe miss that one, maybe miss that one, miss that one, right? So once again, you kind of want to have a happy medium of how far apart your lines are spaced, and that's just going to come with experience. To be honest, like doing this every day, um, you'll definitely kind of learn to see how far apart you should be spacing your lines. Different trend lines are going to have different spaces in between them, and that's something I can touch on in a later video as well. Moving forward, I can see somewhat of a resistance line right here, and then as well I'm going to place my bottom line right here. So this one's a little further spaced apart. Reason being is because of these couple candles here, they went quite further down than some of these ones back here. And so once again, this is just a thing that's going to come with experience. I noticed that a candle, if this one were to ever continue dropping and dropped into here, it might go further down like this one and or this one until it bounced back up. I just did these two support and resistance lines on the 1 hour chart. Now let's say hypothetically our entry chart was the 30-minute chart. We could go on that and you can kind of see the similar trend that the 1 hour chart displayed. And so we would be waiting for this candle to drop into the support line and exit out before we place to buy. So this is the pre-market analysis part for trading view. This should probably take 5 to 10 minutes because you'll be doing them on multiple charts, right? Like you have your trading pairs that you enjoy trading, and so you probably should be doing this on 2 to 3 to 4 charts. But yeah, this is basically the trade view portion of pre-market analysis. So the next website we'll be touching on is called Forex Factory. Now we have three websites that I'll be displaying here, and all three of these websites will be in the description. They're links, so you guys feel free to click on them and just check them out when you need to. But Forex Factory is this is what it looks like. So the use for Forex Factory is you can see it says right here over my cursor today, September 22nd, 27th. Sorry. Now today's a Sunday, so there's not going to be much news. But basically, Forex Factory is if we go to tomorrow, it's all of the news that will be affecting currencies. Okay, so as you can see on tomorrow, Monday being September 28th at 8:45 a.m. Euro, there's some news. ECB president speaks, so there's the impact is going to be a high impact. Now that means for the most part, around 8:45 a.m., you should stay away from the euro currency. Okay, and yeah, so it just shows throughout the day. 1 p.m., 6:30 p.m., 6:50 p.m. on USD, JPY. But these ones are low impact. As you can see, it's a yellow file there, so it wouldn't like I would still trade them personally. But the one I would for sure stay away from is the high impact 845 euro currency. This is just a website you quickly want to gaze upon before you start trading, just to make sure there's no news that are going to be heavily impacting the currency that you're trading. And if there is, I would say stay away from that currency for the most part. Okay, so moving on to our last website, we have a website called Currency Strength Meter. Once again, the link will be in the description down below. But Currency Strength Meter is a very, very, very useful website that you guys need to be implementing if you aren't. So basically, we have our 10 currencies here on screen, and their strength is defined by the amount of bars you have. So JPY, AUD, and so forth would be strong currency pairs. Okay. Now, when referring to currency strength, we'll actually point out a pair and give a quick demonstration. Let's say we were trading Aussie Canadian dollar. Okay. As you can see, the Aussie dollar is fairly strong at the moment with 5 bars, and the Canadian dollar isn't weak, but it's also not very strong with only 3 bars. Now, what exactly does that mean? Well, I'll actually draw a quick demonstration for you guys. So we have the Aussie dollar here and the Canadian dollar over here. Now, if you can picture in your minds right now a scale, and the scale is evenly balanced. And then we put the Aussie dollar bars, which was 5, on this side, and the Canadian bars, which was 3, on this side. What would the scale look like? Well, the scale would be tipped down towards the Aussie dollar side, right? Reason being is because Aussie dollar has more bars, so it'd be heavier. So Aussie dollar has 5 bars, 2, 3, 4, 5, where Canadian dollar only had 3 bars. Once again, the scale would be tipped down in the Aussie dollar's favor. You can picture this in your mind. It's quite easy to actually predict market conditions because all you're seeing right now is what direction is the scale pointing in. The scale, as you can see, is going in an up direction. See what I'm saying? And then when we go over to the Aussie dollar, you can see it's in an up direction. But we'll do another example just to make sure you guys have the grasp of this. Let's say we're trading Euro GBP, okay? Euro, as you can see, has 3 bars, where GBP has 4 bars. Now, if we draw our scale, this is Euro on this side, and this is GBP on this side. We draw our scale. What's it going to look like? Euro with 3 bars, and GBP with 4 bars. So GBP is going to be tipping the scale down with 4 bars, correct? Euro is going to be tipping the scale up with 3 bars. Then once again, if we can picture the scale, that would mean the trend is going downwards, right? It kind of follows the motion of the scale. And if we look at Euro GBP, actually we're already on it, we can see that for the most part, it's in a general downtrend. Currency strength meter is something not only you should be using in pre-market analysis, but pretty much whenever you're trading, okay? It will help you determine and kind of give you that extra confirmation on what the market is going to be doing next, and will definitely help you in future trades. What does it mean when the currency pairs have the same amount of bars? As you can see, Euro has 4 bars and JPY has 4 bars as well. Now, for the most part, that'll mean that the market is in relatively a consolidation state. Say we go to Euro JPY over here, and actually this is what we did our pre-market analysis on, so perfect. But as you can see, relatively, we're in a consolidating state. And that also reflects the currency strength meter. So once again, this is just a great way to tell what kind of state the market will be in, depending on what pair you're trading and what you might look to buy or sell. If you guys know me, you guys know that I like to trade in a consolidating market. So for the most part, I'll be looking for currencies that have the same amount of bars to trade. Now, if you're someone that kind of likes to trade in a trending market, you would look for maybe AUD, USD, right? That would be a fairly trending market right now. But anyways, so that's what my pre-market analysis consists of. It's checking on these 3 websites. First of all, going to TradeView, marking down your support and resistance lines and checking the overall market conditions. Heading over to Forex Factory and seeing what kind of news could possibly impact our currencies. And then last but not least, checking on the currency strength meter and seeing what kind of market conditions may be affected. Now, one thing I do want to quickly touch on before this video ends is the currency strength meter website. You're going to want to be refreshing this often. So as you can already see, I just refreshed it and the currency's already changed. I think they automatically update every 5 minutes, but that doesn't mean the currency changes every 5 minutes. The currency pairs are constantly changing. So whenever you go on this website, you're going to want to be refreshing just to be safe. Anyways, that's all for today, guys. Thank you so much for watching. The past couple days, actually, I've had some people email me as well as message me on Instagram, just some general questions about my last couple of videos. So I really do appreciate you guys for doing that. Please keep asking me questions, and I'll get back to you as soon as possible. But yeah, so those 2 things, my email as well as my Instagram, will be in the description down below. So if you have any questions, feel free to contact me, and we can talk one-on-one, as well as the comment section is always available. So thank you for watching, and have a good